What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over Nvidia. We're going to talk about its fundamentals, its technicals. We're going to give you some price targets for it. And finally, we're going to tell you why we think Nvidia is the next stock to split. So let's go ahead and get started by talking about the fact that Nvidia reached the 1 trillion market cap for the first time in history, making it the ninth company to ever reach that point. So congratulations to you if you have held the stock and if you have capitalized on this upside rally. And if you're wondering if it's too late for you, it is probably not, because we have a very aggressive price target that we're going to talk about shortly. But first, let's talk about Nvidia's fundamental growth. We can see that on its income statement, Nvidia has done a great job year over year of increasing their revenue, which is what makes them such an attractive company. Not only have they increased their revenue tremendously over the last 5 years, more than doubling it, the company's pre-tax income is also going up, and it is in the billions, which is a promising sign. Now many high growth companies will pay dividends, but Nvidia in fact pays a dividend. It isn't much, but it's enough to get people interested. Last but not least, let's talk about its balance sheet and cash flow. Nvidia's balance sheet shows a total asset of 41 billion and total liabilities of 19 billion, which is a 2-to-1 ratio, making it a very attractive balance sheet because assets outweigh the liabilities. And finally, its cash flow. You can see that Nvidia has enough free cash flow to withstand a dark time or potentially buy out some competition. So overall, the company is rated as an A+ company. It is growing and it is overall healthy on the balance sheet. Its price to earnings ratio is currently trading 8 times higher than what a good price company is. So keep that in mind when you are buying the company and when you are looking at the length of time that you are willing to hold. Now, overall, the company is extremely overvalued, but we do expect it to continue its upside rally. And that is because we have seen this example before with a company named Tesla. Between 2020 and 2021, we saw Tesla shares rise from around 57 to a high of 414 before the stock corrected back down. Now, during the period, that company's valuation reached a high of 1300 in price to earnings ratio, which is about 6 times higher than what Nvidia's price to earnings ratio is right now. Now, while everybody thought that Tesla was ready to pull back during those years, the company still marched higher and defeated all the bears that were standing in its way. So when we're looking at Nvidia, we're seeing a very familiar pattern, and we are expecting the company to continue rising, and we have a price target for it of 800 to 1000 next. That is a very aggressive price target and is not likely going to happen overnight. The company will continue making a series of higher highs and higher lows, but eventually we do expect buyers to take it near the 1000 mark, and the company will be forced to make a split because they only have 2.36 billion shares available to the market. The most recent notable companies to split have been Amazon. We can see that Amazon just about a year ago split 20 to 1. It was the same thing with Google, where they also split 20 to 1. So companies do splits because they need to provide more liquidity for the market. A company can only trade at a high volume for so long before it starts getting harder and harder to fulfill shares for buyers. So as Nvidia seeks more buyers and more buyers start pouring in, it'll eventually start running out of shares, and the company will do that split. Now remember, because the company has a short flow of only 2.36 billion, that means the more buyers come in right now, the more likely the stock is going to continue rocketing higher, which is why we have such an aggressive price target of 800 to 1000 for it. So with the rules of supply and demand, the more people buying the stock and the less quantity there is available to the market, the more likely the stock's price will continue skyrocketing and reaching more aggressive price targets. So before we wrap this up, because we compared Tesla to Nvidia, we have to address what happened to Tesla in the recent years. So although Tesla seemed unstoppable at one point and the company continued making higher highs, of course market wisdom came in and eventually corrected it back down. The company moved from trading at a valuation of around 1300 to now trading at a valuation of around 56 when it comes to price to earnings ratio. So although the stock seemed unstoppable, eventually it was stoppable. People took profits and the stock came back down, and it's starting to bottom out again. The same likely scenario will happen to Nvidia. The stock will enjoy a very strong upside rally and it will continue pushing much higher, but eventually we do expect the stock to correct back down. There will be profit taking, and eventually the stock will bottom out at a reasonable valuation and start going back up again.